Friday, November 4th, 2016. Maneco 64, home of alternative economics and contrarian views. This is a technical analysis update on the Footsie, on sterling, S&P 500, gold, silver, and Bitcoin. So it's early in London. It's 7 a.m., so 3 a.m. Eastern Standard Time. Gold right now is 1296.20, down about 6. The Dow is up 8 at 17,939. S&P 2090 up 170. Silver down 12 at 1822. Sterling 124.58, down 5. And Footsie is down 25 at 67.68. Let's see the price of Bitcoin. We are at around 690 on Bitcoin, 690, 692. So first of all, I'd like to talk about the stock market. The S&P yesterday dropped for the 8th straight day, and that's the first time that's happened since 2008. So volatility's gone up. Of course, we've got the election on Tuesday, November 8th. So things are getting a little bit uncertain and maybe a little bit worrying for the stock market. But you never know, of course. So let's start out with the Footsie. The other day I made a video about the Footsie, whether it was there was a double top in the Footsie, and it looks more and more like it. So here's the chart of the Footsie. You can see it's a clear double top. The high of April 2015, yeah, that was 71.30 basically, and the high of October this year, earlier this year, was 71.30 as well. So that is a perfect double top there, and it looks like now this week already the Footsie is down almost 3%. We closed last week around 69.59. We're now, 67. Let's see, 67, 68, I think, as I speak. Yeah, 67, 68. So a double top usually means that the market will go down and test the midpoint. And the midpoint was in February this year at 54.97. So the low after Brexit is not the low of the year. Actually, it was the low in in the beginning of this year in February at 54.97. Of course, there's a long way to go there. Normally, if we break through the midpoint, the market will go the distance from the double top to the midpoint down, and that would be a huge move. It would be just below 4,000 for the Footsie, but that's still far away from where we are right now. But as you can see there, that arrow I drew doesn't look very good for the Footsie at the moment, unless we go back up and break the all-time highs at 71.30. It looks like in the medium to long term, the market is negative here. So now I'm going to go look at the pound or sterling. Yesterday, as you can see here by the chart, we had a strong move higher. We've broken through this trend line coming from the June 23rd Brexit date. There is good resistance there, as you can see, just above 28. It used to be a support there earlier this year from July to around the beginning of October. It's possible we could go up there. I still think medium to longer term the pound is on the way down. I did say a few weeks ago that I thought the pound could stabilize. It looks like it's doing that for now. Exactly where it's going to go, difficult to say, but it looks a little more positive. I would say the news yesterday about the High Court blocking the UK government from triggering Article 50 to leave the EU, the news, I think, makes it even more uncertain. I think it's one of the reasons why the pound went up yesterday. But if anything, brings a lot more uncertainty into the market. There's people talking that the government might appeal the decision and take it to the Supreme Court, that we might have to have general elections. So still up in the air. So that's Footsie and sterling. Now we look at the S&P 500. Here's the chart. It is a, let's see, it is a daily chart, of course, of the S&P 500. As you can see, since the 24th of October, it's been one way down. 8 days straight of losses in the S&P, first time since 2008. So I've drawn here, there's the May 2015 high, that line coming across the chart. And then I've got the key supports, 2073, which is, let's see, the low from the 6th of July, and then 1990, which is the low from the 27th of June, just after Brexit. So yeah, 1990 there, and as it drew that line here, it looks like, doesn't look very good. We could keep going back down. Of course, Tuesday is going to be very important, but on a technical picture here, it doesn't look very good for S&P. Looks negative. Let's see where we're right now in the S&P. We're at 2090, up 1.7. That's, you know, the low has been 2086 overnight. So that's the S&P 500. So now let's go have a look at gold. While gold and silver, I've got weekly charts. There's been quite a bit of volatility yesterday in gold and the day before. And today it looks like, again, it's going to be fairly volatile. The weekly chart though still looks very good. Yesterday the low actually was 1285, and the high last week was 1284. So if anything, we just tested the previous week's high and we rebounded very well, and we closed above 1300. And that line there, the long-term trend line from the high in 2011 to 2012, that's coming right across where there's resistance right now, right around 1308, 1310 in gold, but still looking quite positive. Doesn't look like it's going to be a bear flag anymore. So as I speak here, yeah, gold is down a little bit. There seems to be a battle here for that 1300 level. We're at 1297.50 right now, down 5 in gold. So technical picture still looking fairly good on the weekly chart, I would say. Now let's have a look at silver. Same thing with silver, that 1840 support level there, you can see that's very important. We got above that earlier this week, and yesterday silver got hit quite hard, and it went down actually to 18. That was the low, $18. You know, right on $18. But the high last week was $17.91. So that was technically that was quite positive that we held there. That 1840 level is still important. As I said, the trend still looks pretty good for silver. It looks like we've bottomed, in my opinion. And as you can see by that arrow, that's the way I think we're going to be going. This is the medium to longer term picture for silver. And let's see, silver right now, we're trading 1824, down 10. The range has been 1818 to 1842. And so let's have a look at Bitcoin. That, as I said a few videos ago, you have to expect a lot of volatility in Bitcoin, and that's what we've had. You know, we moved up very quickly, so we're gonna have some setbacks on the way higher. Right now we're trading around 691. I'll bring up the chart here of Bitcoin. And there you go. That's the weekly chart. Last week's high was right around here, 688. So we're just testing technical levels. I think, as you can see, the chart still looks positive. There was news yesterday about the Chinese government looking to put capital controls on Chinese public buying Bitcoin. Some people might argue that's why Bitcoin went down. Maybe, but as I said, expect a lot of volatility. The faster and higher the market moves. The same for precious metals, I would say. So yeah, that's the technical look for the markets here. So my conclusion is that equities or the stock markets are under pressure and not looking good technically, and precious metals and Bitcoins looking good technically, volatile. About the stock markets, I read an article the other day that the put to call ratio is very high. And what does that mean? That means that there's a lot more investors buying puts to protect on the downside than they're buying calls for the upside in the stock market. And normally that's a contrarian indicator. That means that we are bottoming. So there is that out there, but the same article noted that sometimes it could mean that the market is due for, on rare occasions, the fact that this put to call ratio is really high could mean that the market is due for a big drop. So uncertain times, as I said before, technicals are not exact science, but they help. And again, these videos are just what I think. They're not advice on trading or investing. So if you enjoy my videos, please like, share them, and subscribe to my channel if you haven't yet. And if you'd like to donate, there's links below in the description. Thank you. Take care. Bye.